But there's also a lot of people out there that have money that are so fed up with it being invested in Wall Street and seeing crappy returns. I go to real estate conferences all the time, and I'm like, how many of you have a retirement account? 2/3 of the room raised their hand. How many of you are invested in mutual funds and stock? 2/3 of the room raised their hand. How many of you can tell me a great mutual fund to buy? For your listeners, you guys, why are you not using your IRA or 401ks to invest in real estate?
Welcome back to the Light It Up podcast. If you're new to this channel and you want to know everything about making money in real estate, selling, sales skills, building your business, or investing, then subscribe below, tap the bell for notifications so you can be the first to know what makes our great guests so successful.
And we get texts and messages from people just like you every single day. We absolutely love it. So if you're in the business or new and looking to grow, our numbers are in the description below. Feel free to reach out.
All right. Thank you so much, Matt, for being here. We appreciate you spending some time with us today.
Yeah, my pleasure. I'm grateful to be on, and I want to talk about the favorite things to me, which is real estate, but also how retirement accounts can be used in real estate, because I don't think many people know that. And if they do, they might have been told the wrong thing. So I think it's a total powerful topic for anyone in the real estate space.
Yeah, it's funny. You literally described it the exact way that KIRO and I were talking about it as we were preparing for some topics today. I think people know or have heard of other people that have invested in real estate through their IRA, but don't know how to start, don't know what they can invest in, don't know which custodian to use. And the reason that I reached out to you specifically is because I hadn't heard of people using with checkbook access or doing it with checkbook access, which makes it.
We can get into that strategy.
Yeah. So we'll dive into some different things today.
Yeah, love it.
But before we do, why don't you tell us a little bit about you, your company, Directed IRA, and some of the things you guys are working on.
Yeah, so I'm a tax lawyer by trade. I don't practice law anymore, but I have a law firm, KQS Lawyers. We help business owners and investors across the country, have 4 offices, one in Phoenix, California, Utah, Idaho. But I have, my specialty as a lawyer was helping clients use their IRA or 401k to invest in real estate. Like that was my legal specialty. I wrote the #1 book in the field on it, which is called the Self Directed IRA Handbook. Government agencies buy my book. The National Association, the retirement space for self-directed IRAs uses my book as training curriculum. And I just became like an expert in like this one little niche area. Nice. And so I used to refer all my clients to other IRA companies and banks that did self-directed IRAs, and they all sucked. I'll be honest. I was like referring like literally 5 people a day because I became the guy in this little space, and all those companies suck. So I was like, I'm just going to start my own. That was 4 years ago. I started Directed IRA. Yeah. And we're the fastest growing self-directed IRA custodian in the country doing alternative assets. We have $1.5 billion of assets under custody. We're opening about 30 accounts a day. And I would say half of those accounts every day are buying real estate. That's the most common investment, whether they're buying like a duplex down the street, a short-term rental, single family, they're investing in a fund that owns real estate. They're partnering in an LLC with a few other people, buying a commercial property or kind of a bigger deal by pooling some money in a little partnership deal. They're lending money to other people. They're just using their IRA to be a hard money lender. Yeah. I mean, that's happening every day over here. And so that's what I'm doing every day at Directed IRA. And we're just kicking butt at it. And I have an amazing team behind me doing the great work. But that's me. I mean, directedira.com is where you kind of learn about that. We have tons of resources there. But that's the Reader's Digest of Mat Sorensen.
Love it. So it actually just came back to me as to how I first heard your name. Do you know the name Stacy Wyatt? He's an EXP agent down, I think he's in Georgia, and I had met him in Montana at a mastermind, and I think we spoke for like 45 minutes, just me and him, on using your IRA to invest in real estate. And he's like, listen, write down this name, Mat Sorensen. You got to go to him. And you got to go to him, and that's where you got to move your IRA to. And then I think I had jotted down your name, and then on Instagram or whatever, you know, that Raz factor, that once I heard your name, I saw that you connected with Pace, and then I was like, wait a second, I know this name. So it's all coming back to me now. So that's how I guess we originally got connected. So I wanted to give Stacy a shout out because he is the one who had told me to look you up.
Yeah, sweet. Thank you, Stacy.
There you go.
Good stuff.
All right, let's run through lightning round because there's a lot we want to dig into.
All right, so this is just for us to get to know you a little bit better and
all right,
break the ice. Let's see. What's one accomplishment you are most proud of?
One accomplishment I'm most proud of. I'd say I got 3 daughters and 2 stepdaughters. So I would say my amazing daughters. I'm pretty proud of them and just like the people that they are.
Awesome.
I love
Awesome.
that.
And I was reading your bio before. You became a father at 18. Is that right?
Yes. My oldest daughter's 25.
Damn.
And she's awesome. And yeah, I was a teen dad, and basically my family was totally embarrassed by that. And, you know, but I got married at a young age and divorced my wife, that spouse, my 3 daughters' mom, but got remarried recently. But
Congrats.
yeah, that was really tough, man. I mean, I was a teen parent and I learned hard, you know, a lot of lessons, but it made me the person I am today. And, you know, got an amazing 25-year-old daughter now, which is pretty sweet.
Yeah.
You know,
for
like
you.
you hang out, you know. I'm only 43, you know.
That's pretty cool.
That's got to be fun.
Yeah. All right. Next question. What's your favorite quote?
Ooh, my favorite quote. All right. Probably one of my favorite quotes is complexity is the enemy of execution.
I like it.
One of our mantras at Directed IRA is to make it easy. And one of the main reasons a lot of people don't use their IRA to buy real estate or to quote unquote self-direct, and why there's so many people that have money in Wall Street or in mutual funds, they don't even know what the hell it is. They couldn't even tell you the name of it. And they got hundreds of thousands of dollars invested in it, is because Wall Street made it easy. You clicked a button and you went over there. So like what our mission at Directed IRA is, we want to make self-directing easy. And I really believe that if you make it complex, people aren't going to execute on it. I don't care whether you're selling, you know, widgets or self-directed IRAs or real estate, or doesn't matter what you're doing. Like if you can make it easy, like you will win. So yeah, so I go complexity is the enemy of execution. I think that's a Tony Robbins quote, but I'm not sure.
That's golden.
It's for sure. And I think that goes for anything these days. The more complex it is, the more people will just not do it. Like our attention span is so short these days. Like how many times have you been filling something out online and then you're like, wait a second, I got a phone call. And then you're like, did I sign up or did I not sign up?
Yeah.
Is that in my shopping cart or did I actually buy it? You just get distracted so easily that you have to make it super simple.
Yeah. And it's even, I just came out of a meeting with my CFO, my COO, my director of technology, and like we're redoing some of our technology stack and process, and it's going to be a significant investment, but it's all about making it easy. I think a lot of companies, they get bigger, they make it more complex. This is a really important business lesson. This is a hard one I've had to learn is, a lot of people think, and this is a trap in business, is your team will come to you and be like, hey, let's do this. Let's make this change. And my response is always, is that easier for the customer? No, but it's easier for us. So, and even as a business owner, you can get caught up in that. Oh, this will make it easier if I do this. But now you just push more workload on your customer. And so always focusing on making it easy for the customer. And like that's like, if anyone has an idea here and it doesn't make it easier for the customer, it's a no-go. I don't care if we're saving a shit ton of money. We'll lose it on the back end. I'm telling you later, we'll lose it. It's like, if it doesn't make it easier for the customer, not happening.
Good.
No, that's golden.
It's a good mantra. What was the hardest decision you ever had to make?
Hardest decision I ever had to make.
We're getting deep here.
Hardest decision I ever had to make. That's just going to be like personal stuff. You know, I have to say like the teen dad thing. I mean, that was pretty hard at 18, deciding, all right, I guess I'm going to be a dad. That was a very hard decision. Very like immature, didn't know what the hell I was doing. That was super tough.
Is your plan to have more kids in the future?
I got a vasectomy, you know. You know, but then I got married in November, and my wife had twin 9-year-olds. Well, they were 7. They're 9 now. So, you know, so I just picked up 2 more. But I'm, you know.
Well, what I was going to say is now you're tapped out. You got all the kids out of the way, and you can focus on everything else.
Exactly. Yeah. So. Good.
Love it. What's one lesson that you, if today was your last day on earth, that you'd want to leave with your daughters?
Ooh, that's a good question.
Use your IRA to buy real estate.
Yeah. Invest your IRA, your Roth IRA in particular in this. You know, I'm actually writing a book that's basically about a letter to my daughters. It started as a letter that I wrote to my oldest daughter when she graduated from high school. kind of about like what I've learned in life and what I want you to know as you become an adult. So I actually have already like 14 chapters in that book. And it's one of these things that I'm like perfecting and will never finish. But it's kind of it's this little therapeutic thing for me. It's a good little book, but it'll come out one day. But one big lesson in that is just go your own way. That's probably for my kids or anybody else. If I was leaving this earth, it's like, just go your own way, chart your own course, figure out what works for you. A lot of people are like, everybody should do X. And this is kind of one of the things about business and entrepreneurship and even social media that drives me bonkers is you need to be an entrepreneur. Why? Not everyone wants that, you know, like, and it's not everyone's a good fit for it, frankly, either.
Yeah.
You know, and I don't care if it's about religion, politics, business, go your own way, figure it out for yourself, see what resonates with you and live that truth to yourself. I think that would be the biggest lesson. And I think that's how people actually find happiness is they figure it out for themselves.
Yeah. That's such a good segue because what you do is such a big niche that provides so much value that people aren't aware of. And it's because of the fact that people are told you should have an IRA, you should fund it regularly. This is, what you should do. You should get, life insurance, cash value life insurance. You should do all these traditional things. And you have no idea how any of that operates. And when you're exposed to more people and bigger people, then you get exposed to certain individuals that are, different paths that they can take you. So like when you guys were talking earlier, I was just thinking about a conversation I had with my friend who's a pharmacist. And he was like, dude, what do I do with like investment funds? Like, what do I do? Do I just keep funding this IRA that I have no idea about?
Right.
Or what do I go into this cash value life insurance? Well, what's the point of me investing in an IRA?
Yeah.
Mm-hmm.
So it's just like, all right, well then there's not a perfect picture that you can see what the future looks like in each direction. So why is an IRA important and what's the difference between a self-directed IRA and the traditionals?
Yeah, I mean, a self-directed IRA is the true like go your own way thing. It's kind of like I'm going to invest in what the hell I want to invest in. So if I can just back up about retirement accounts in general, they've been around for 30 years. A lot of people are like, wait, Matt, you're telling me IRAs can buy real estate? Yep. Did the laws change? I've never heard that. You've always been able to do it. It's just what happened when retirement accounts came out 30 years ago. Wall Street, and if you're like Morgan Stanley or, Merrill Lynch or whatever, retirement accounts came out, you're like, a lot of people love these and they're saving all their money in. We better let people open up accounts with us to invest in the things we already sell. We sell investments, right? So we're going to let you open up an IRA account with us or a 401k account with us. And what are you going to be able to buy? What we happen to sell.
Our funds.
So we're a broker dealer. We don't sell real estate. Why am I going to let your IRA buy real estate? I don't sell that. I don't make money when you buy that. If I'm, Morgan Stanley, let's say, or Fidelity or whoever. So they're like, so you can kind of buy what we sell. So real estate's always been an asset your IRA can own. Small businesses, nobody thought about crypto, but you can buy it. Any investment asset that's not for personal use, can't like buy a home or something like that, but any investment asset not for personal use, you can buy with your IRA. And so as kind of technology's improved, the internet, frankly, some businesses have gotten some traction in it. It's become much more popular that people are like, oh my gosh, I can actually do this. But here's a number that'll just blow you away. There's $33 trillion in US retirement accounts. Like there's no more money to invest in anything than US retirement accounts. And if you're like out there, someone who's like, maybe you're even just raising capital for real estate. I'm not even talking about people that have retirement accounts. Just think of like raising capital for real estate. You're trying to fund deals. You're going to do a fund. You want a private money lender. You're going to go talk to 50 people that you know. I'm telling you, it is way more likely that people you're talking to are going to have $100K to invest in your deal in an IRA or 401k than they are in a personal savings account.
Yep.
This is where all the money is in America. And if you happen to be one of those people that has this little sliver of the $33 trillion, there's over, 150 million people have a freaking IRA. That's like half the country, So like you have your little sliver of this, you can invest it in real estate. And it's not for everybody, but it's for a hell of a lot more people than are currently doing it right now. And for your listeners, you guys, why are you not using your IRA or 401ks to invest in real estate? I go to real estate conferences all the time, and I'm like, how many of you have a retirement account? 2/3 of the room raised their hand. How many of you are invested in mutual funds and stock? 2/3 of the room raised their hand. How many of you can tell me a great mutual fund to buy? Nobody raises their hand. How many can tell you a good real estate investment? everyone's hand goes up in the room for the, and it's like, what are you guys doing? Why are you buying a mutual fund with your IRA 401k? You're just being lazy.
Yeah, because it's exactly. Well, I sort of look at what your message has been, at least from my naive perspective on Instagram and social, is that you're becoming you are the self-directed IRA guy, just like Pace Morby has branded himself as the sub 2 guy, right? Like sub 2 has been around for years. Mm-hmm. People just don't. It's not the cool thing, or it's not popular, or it's a little bit complicated. But if you don't know, all the ins and outs of it. But that comes back to what you were saying before, is like, you need to make it easy for people to do. It's interesting because it's funny. I feel like my father's my accountant and my CPA. He's a financial planner and he's also a CPA.
Yeah.
So at the end of each year, when it comes to doing IRA for my profit sharing plan for my brokerage and stuff, I just write the checks and I give it to him, and I trust him, and he puts it in these mutual funds and stuff. And it's always done well, but I've got a ton of money in there just because he makes me do it every year.
Yeah.
And then as you make more and more money, you talk to guys like, I remember talking to like a Lee Marcus or other big brokers throughout the country, and they're like, damn, I wish I didn't put all this money into my IRA because it's only growing at a 5% or 6% or whatever, those are usually growing at. So I think for a portion of my life, I was like, shit, I shouldn't be putting like people like Grant Cardone, I think, will even tell you, like, don't put all your money in your retirement.
Yeah,
don't do
they
that
crap
stuff.
on it. Yeah.
Yeah. But now I'm like, once I found out your strategy, I was like, because I've always heard about the self-directed IRA, but not with the checkbook access and these different opportunities that we're going to dive into today. I was like, maybe I can save my IRA.
Yeah. Well, there's a lot of different avatars that we will call them in terms of people who like to self-direct and who are like, and I think for someone like you, knows real estate, has money in a retirement account, and you've had returns, but you're like, maybe I could do better in real estate. Maybe I can do a little bit better than what I can get just in the general market, because really you have a competitive advantage. Like in the stock market, you're trying to beat Wall Street. You're not going to beat them. You know what I mean? You're like, ooh, I know the next great company. It's going to be, or I knew the next company that's going to make a bunch of money. It's Apple because their next iPhone's amazing. Yeah, you know what? 100 million other people know that too. That's already priced into the stock of that, But you can see a property or a deal that not 100 million people are seeing, right? Yeah. And you can find opportunity that has huge value where you can make money and grow your retirement account. And so for this $33 trillion that's out there, there's so much opportunity. And this is every American has a little, not every American, most Americans have a little slice of this in their IRA or 401k. I just want to throw real estate on the table, and like someone that knows real estate, already invests in real estate, or is in the real estate business is a perfect person to go grow and make a bigger retirement. Because that's the goal. When you hit 59 and a half is when you can start pulling money out of your IRA or 401k. The goal is to have the biggest pot of money to pull from. How do you get the biggest pot of money? Well, you can put more money in, but that costs you. Or better, invest it. Well, get higher returns. And if you can do that in real estate versus the S&P 500 or a mutual fund, then you should be doing that. But another candidate, and I want to make sure everybody understands how a Roth account works. So let me back up, because I didn't even say what a self-directed IRA is. Let me just back that up. Let's say you have an IRA at Fidelity, okay? And I always get this. People are like, well, I heard you, Matt, and you talked about buying real estate in an IRA. And I called up Fidelity and I told them I want to buy this rental property on 123 Green Street, and Fidelity told me you can't do that. Well, that's not because IRAs can't do it. That's because Fidelity IRAs can't do it.
Exactly.
They're a broker dealer, right? It's like you walked into McDonald's and asked for a chalupa. You can have chalupas, you just aren't getting it at McDonald's. You can buy real estate in an IRA, you're just not getting it at Fidelity. Yeah. So you need to go to a self-directed IRA custodian, like our company, Directed IRA, and we'll let you invest in real estate with your IRA, And there's, 20 other companies that do what we do. But now when you come to us, you have your IRA money here and you can just transfer it. If you got an IRA at Fidelity with 200 grand in it, you could move the whole 200 grand over to us. No tax, no penalty. Your IRA is just now at Directed IRA. You could move 100 of it or whatever you wanted to do. There's no tax or penalty to move an IRA. So now your IRA is at Directed IRA. Now you're like, oh, I want to buy that rental on 123 Green Street. We're like, cool. Go get a contract. Go get the property under contract in the name of your IRA. It's not in your name. Your IRA will pay for it. Your IRA gets the rental income. Your IRA gets the gain when you sell it, and it doesn't go on your 1040. It's not taxable to you. So that's a huge benefit to IRAs is I can use that money to go grow wealth for the long haul in a tax efficient manner. and I can invest it in stuff that I think is going to grow better than the mutual fund over at Fidelity. I don't mean to pick on Fidelity, but you know what I mean?
Yeah.
So that's kind of like what this is. If someone was like, I'm still lost, Matt, what is it? That's what a self-directed IRA is.
Yeah. And I think it's super important for realtors because I spoke at a conference. I just came back from Vegas. It's all blending together. It's probably like 10 days ago. And I was speaking with other realtors, and the common theme was that there's so many realtors out there who have been in the business 5 years, 10 years, 15 years, and the only property that they own is their own home, if that, right? They don't own rental properties. And it's me and KIRO both have been in the business for, I'm 16 years and whatever.
11, 12.
11, 12 years. And we both own rental properties, but not nearly as many as we should. So the common theme is when you talk to other realtors about why they don't own more income producing assets, they're like, well, I did other things with the money, or I didn't have enough money to do, more than one option. And I think there's people out there like realtors that have money in their IRA, or maybe they have money in a 401k from their prior position before they started real estate, and they don't realize that they could use that money.
Yeah. I mean, I spoke at Keller Williams Commercial Summit, and like, that room was just like, everybody was like blown away, like, wow, I never knew I could do this, and these are commercial agents, that are in the investment space a lot. And it's a huge opportunity for them. Like, they see deals all the time. Let me just give you an example too of like why this is cool and why I think like real estate professionals, agents, like investors, why this is a cool strategy. Because it's not just about like, okay, I can do better than a mutual fund. Okay. If I had a client, this client was like, this is probably 10, 15 years ago now. He's a real estate developer. And he came to me and he said, Matt, I got 10 grand in a Roth IRA. I don't have a lot to do with it, but I have a deal I want to do. There's some land up against the highway that's agricultural property. I want to go get it on option contract on it. I don't want to buy it, but I know that the county and state are going to put in a freeway exit next to this land, and it's going to go up in value over time. But I don't want to buy it now, but I want to go get an option on the owner, and I can get one. I already talked to him, but I don't want to do it personally. I want to do it in my Roth IRA. I'm like, cool, let's do it. So we did an option contract. His Roth IRA was the owner of the contract and gave the guy that owned the land, the farmer, $10,000. And he told the farmer, in the deal in the option contract was, hey, I want the right to buy this property for 450 grand within the next 5 years. If I don't exercise it, you still keep my 10 grand, but you've got to sell at a price of 450 in the next 5 years. Now the property was worth like 350 at the time. And the farmer knew that. He knows what property went per acre in that area, and he can just go buy more if he needed to, down the highway. So he's like, cool, I'll take your 10 grand. Well, 2 or 3 years pass, that exit comes off the highway, and now this is like highway commercial. There's a service station going in type stuff, a subway, all this. And that property goes to being worth $1.5 million.
Wow.
Now my client, he didn't end up buying the property. 3 years later, he just sells the option for over $1 million to some other developer who was willing to pay, for that option. And then they gave him $1 million for it, over $1 million.
Yeah.
Well, that $1 million went into his Roth IRA.
Wow.
Now, if people don't know about a Roth IRA, that's a totally tax-free account. This client was in his 50s. That $1 million profit from a $10,000 investment went into his Roth IRA. No tax. And when he pulls it out 5 years later, because he's already at 50, it comes out totally tax-free. Now, this client has a 10 million plus Roth IRA now, but when that deal kind of finally came around, I was like, wow, that was cool. I've helped a lot of clients do real estate deals, but I hadn't really seen a client use a Roth account, particularly in a super strategic way. Now we've done lots of that. But I remember when this client finished this deal and he's calling me to make sure he, crossed his T's and dotted all of his I's at the end of the day. And he was getting ready to get his $1 million back in his Roth IRA. And I remember like finishing the call and then telling him he's good. I'm like, it's all great. We kind of went through everything. He was smart. He was kind of, he's good. One of those real estate operators that was like very good with like keeping his crap together. Not all of them are. But I remember at the end of the call, he was like pissed off. Okay. We kind of ended the call and he got very pissed off. And I'm like, what, man? I'm like, I was waiting for high fives. You know what I mean? I was like, I just like helped you. Like basically this guy's, think about it. This guy's in the highest tax bracket. He would have state and federal taxes. I mean, he would have kept 2/3 of this at most, at the end of the day from all the taxes he would have to pay. You got to kick the whole dang thing. But he was pissed off because he said, you know what? And as I asked the question, why are you so pissed off? He's like, you know what? I have a big 5 CPA firm, a name brand financial institution as my financial advisor, a big law firm lawyer. And he's like, and none of these idiots told me I could use a Roth IRA to go invest in real estate and what they knew I made money on every day on my tax return. These guys knew how I built all this wealth. They knew I did it in real estate. And all these dummies told me to go buy mutual funds with my IRA or 401k. He's like, I'm good at real estate. No one told me this tool that everyone else uses to go buy stocks and mutual funds could actually be used in real estate. And I was like, man, that's when it really hit me actually to be like, I got to write a book about this. I got to be the number one expert about this. There's way more people out there like this guy that are like, not just interested in this, but at the end of the day, pissed off that no one told them this was even an option.
Yeah.
No, absolutely.
Yeah. It's interesting because I have a few deals that I'm looking at right now, mostly like fix and flips, right?
Yeah.
And I'll probably I have the cash, I could do it myself, but it would be helpful for me. I'd do a lot more deals if I could do a hard money lender. So I've got a hard money lender lined up for probably 3 or 4 deals that I'm looking at right now. Now I'm sitting here talking to people like the Finance Cowboy or Chris Crone or Pace Morby or Jamil, all these guys. And they're like, you don't need to use your own money. So now I'm like, all right, well, why don't I use a private money lender for the down payment and some of the other things, so I don't have to put any money out of pocket. Yep. And I was speaking to a private money lender that I'm considering giving these deals to, and I had given him the option of the IRA, and I didn't know what his situation was, if he had an IRA, if he was interested in using an IRA, and he's like, wait a second, I would do that. So I think you just have to. It's all about just repackaging it. I mean, if that's where I was going before with the realtor thing. I mean, if there's a deal and I'm saying this directly to realtors, I think a lot of times we look at a deal and maybe, and this has happened to me and KIRO many times over the years, we're looking at it as a listing. What does this seller want to sell his house for or sell his property for? Okay, 1.5, right? And a lot of times people aren't thinking big enough to say, I could buy this myself, right? So if you have to put down 30%, let's just say it's 30%, it's $500,000. You could, in theory, go to 10 people and get 50 grand from each of them, right? From their self-directed IRA.
Yeah.
And create your own little fund to fund the whole down payment.
Yeah. And the cool thing is, it's so funny because I debated IRAs with Chris Crome, by the way. We did a webinar with him last month because he's always crapping on IRA or 401ks too. We've done quite a bit of work together, but anyways, it was pretty funny because we got to this, he loves self-directed IRAs, because I'm like, the problem with IRAs is not like the IRA or 401ks. It's like the investment option you have. If you know you can self-direct it and do real estate and you believe in real estate and you're good at real estate, that then all of a sudden the IRA becomes like this blessing actually. Right. But on the private money lending, that's actually what I do with my IRA. I bought rental properties at first, and I did well on that. Right now, my money I'm just private money lending my own self-directed retirement account right now. I get 12% interest and 2 points on my loans. That's 14% annual rate of return. My account will double every 5 years. If you think of this, the rule of 72, over a 14% rate of return, my account's going to double every 5 years. That's pretty awesome and way better than I'm going to get in the stock market. And these loans are secured with real estate operators I trust in first position. These are backed by the real estate. Yeah. And so it's a super popular way to invest your money for someone like me. I'm running businesses. I have 100 plus employees. I'm not a person that gets the deals that you would see, that sees a listing and it's like, ooh, this is actually an investment opportunity, not a listing. Yeah. I don't see that. Right. So for me, I'm like, I want to just passively invest my money. So I was at a real estate conference of people that are all real estate deal makers. And they were talking about private money and how do you get a hard money lender? Where do we find these hard money lenders? They're so hard to find and everything. And I'm like, I'm one. By the way, I'm looking for deals right now. Yeah. And then the next week, I'm not kidding. The next week, I go to a conference at it was called the Real Estate Investing for Dentists Summit. Okay. There's a Facebook group of 10,000 of these dentists that invest in real estate. At this live event that I spoke at, there was about 400 dentists in the room that invest in real estate, but they have full-time dental practices. You know what I mean? And I talked about private lending your money. I'm not kidding you. I probably talked to 20 plus dentists that took the time to to walk up to me and ask me the question, where do I find real estate investors that want my money? I can lend them my money.
Yeah.
And I'm like, first of all you real estate investors are going in the wrong circles. Go to the dentist event.
Yeah.
Like you will be a celebrity over there. Hey, I do real estate deals. They're going to like fall all over you. Yeah. Like I've got money. Can you put it to work? You know what I mean?
Yeah.
And so, and all these dentists, I'm like, don't go to an event with a bunch of other dentists. And that's what I had to tell them. Like, you guys go to your local RIA. Go find an agent that's active in your market that does investing. Yeah. Like you need to start connecting. Don't talk to other freaking dentists. They got the same problem you've got. Go find the people that are looking for the money, that have the deals. So, but we do that at our Alt Asset Summit too. I have an alternative asset summit, altassetsummit.com. People do a lot of networking, and we have people like a lot of our clients come there with their self-directed accounts because they're looking for investments. Yeah. You know what I mean? And there's other people that are deal maker people that go to that type of event. So I think there's a huge opportunity. And that's one of the things I love about self-directing is there's a lot of people that have deals and opportunity out there, particularly in the real estate space. But there's also a lot of people out there that have money that are so fed up with it being invested in Wall Street and seeing crappy returns. They love real estate, but they don't have deal flow.
Yeah.
And both of these people need each other. And it could be awesome when they both connect and it's a win-win situation. Their retirement account gets a better return than it would have gotten in the stock market. This person was able to do a deal they couldn't have done because the bank wouldn't finance them. Yeah. It's pretty cool.
That's awesome. Can we take a step and go into debunking some of the myths around it? Because I'm not that informed about the self-directed IRAs, but there's some concepts we were talking about on the drive here.
Yeah.
That there's certain impressions that you get that you might not be able to do something with the self-directed IRA, or you might be able to. For example, if you're buying an investment property, you're saying you're buying it under the IRA itself and all the proceeds go there.
Yeah.
So if somebody wanted to refinance it, for example, is that a possibility, or they can't do that under?
Yeah, so they couldn't strip out the equity and refinance it to get the money personally. Mm-hmm. They could refinance it and the IRA could get the money to go buy more assets. Mm. Now, if you get a loan with an IRA, whether your IRA is buying a new property and getting a mortgage to buy it, or whether your IRA owns a property and you're refinancing and stripping out equity, basically, whenever the retirement account gets debt, it has to get what's called a non-recourse loan. Mm. And there's about 5 or 6 banks, they're all on our website at directedira.com, that lend to IRAs on real estate because it takes a specialty loan product. Basically, the rules for IRAs say that you, the account owner, and your family, your spouse, your kids, parents, but primarily you, can't guarantee the loan that your IRA gets to buy assets. Your IRA can get a loan to buy assets, but the account owner can't guarantee it or use their personal assets as collateral. Mm. So if you go to your typical bank or mortgage lender, they're going to make you sign, they're going to run your credit, they're going to, have your personal guarantee on it. So you have to kind of use these non-recourse lenders, but there's more and more banks coming out. When I started in this, there was 2 banks that did this when I started doing this back in like 2007. Now there's at least 5 or 6 that like we use regularly and see deals with, and there's a lot more that I don't work with and I just don't see, Yeah. So make sure you get a non-recourse loan. But remember, when the IRA is owning something and buying something, the IRA gets all the benefit of it. Mm-hmm. I mean, you get it later when you hit retirement plan age of 59 and a half, but any money that the retirement account's making on the deal is going back and growing the retirement account.
Yeah.
Yeah.
So it's a long-term wealth building strategy for like someone with an IRA account. Like think of my self-directed account that I'm lending money. I'm not looking for that money back, right? Like I'm lending it out at 12% interest in 2 points. I'm like, once that deal closes, I'm putting it into the next deal, right? Yeah. This is my long-term money. I'm not looking for that money to come back and then go buy my next personal home or a second home or a new car or go on a sweet vacation. I mean, so this is like my long-term wealth building money.
Yeah. So hypothetically, would it be possible for the IRA to purchase a property and then you would add the value in there and then you could sell it to an LLC that you own as well? That way you'd be able to get tax benefits from there?
Nope, can't do that either. So there's something called the prohibited transaction rules for IRAs. It's an important rule. It's 4 chapters in my book, the Self Directed IRA Handbook on that, which by the way is on my site or on Amazon. It's only $20. The basics of that rule is your IRA has to hold stuff for investment purposes and it cannot transact with you or any LLCs you own, or your spouse, or people in Utah, all your spouses, your kids, Yeah. Okay. Like these are restricted people to your IRA. Now your IRA could sell to third parties, and it could own a property and lease it to a third party. And, we have clients that own short-term rentals with their IRA, but you can't stay at the property. Okay. It's got to be leased out to other third-party people. So, but think of this, because a lot of people are like, well, Matt, I want to buy the rental property, or I want to get the rental property in my personal name so I can depreciate it. And that's one of the things people say, oh, you shouldn't buy real estate in your IRA. This is like Robert Kiyosaki. He's like, don't buy real estate in your IRA or 401k. And his argument is you don't get to depreciate it. I'm frankly a little annoyed by that argument. If you're buying real estate to take depreciation, you're doing it backwards. That's something that's nice in real estate, but you should be buying it to grow and build wealth. And let me tell you, depreciation for a real estate professional is pretty cool because you can offset your other income, right? It could be offset your commissions, and there's a whole tax structure. I'm a tax lawyer by trade. So, but your IRA doesn't hit your 1040.
Right.
Okay. Your IRA, there's no tax. You're in a no tax zone with your IRA. And this is why there's no depreciation, because it doesn't go on your 1040.
Right.
The only reason I want depreciation is because I have to pay taxes in other areas, and that depreciation can reduce taxes in other areas. But I'm in a tax-free area with my IRA. What would I rather be? I'd rather be in no tax area with my IRA. So I don't get you lose depreciation, but I don't pay tax with my IRA.
Yeah.
So I guess it's what's more important to you, not paying tax or having.
But there's a way to get both if you invest it with someone else. Like for instance, if you're investing it with a builder who builds like an 80 unit complex, refinances the money, gives it back, and you still get a phantom return or like a small piece of the pie, that's allowed, right?
You mean if you did it personally?
No. So if you hired or like you invested with a developer, like a third party, and then
No, because your IRA, remember, just think your IRA is not hitting your 1040.
Yeah.
Because when you think of your personal tax situation, your IRA is not involved. Like think of your IRA right now that could be at Fidelity or TD Ameritrade. Like it's not going on your 1040.
Right.
It's just not hitting your tax return.
Right.
So I don't care if you invested in a fund, a real estate fund, a LLC, you bought a property yourself, you had private money lending, none of that's hitting your 1040.
Yeah. So let's say the way that you private lend right now, someone said, okay, I'll pay you interest, the 12% with the 2 points, but then I'll give you 2% equity once I give you back your money. Or you'll keep 2% equity. Is that possible?
My IRA would get that
give
extra
the IRA
2% equity.
The IRA the equity.
So I can't kind of meddle in here and be like, well, I want to get a little something for Mat Sorensen. No. Mat Sorensen IRA is getting everything. If Mat Sorensen IRA is doing the deal and putting the money in, Mat Sorensen IRA is getting all the perks out of this thing.
Right.
Got it.
So
but you can do that. You can do like those equity kickers and stuff like that. And we see that quite a bit. I haven't done it myself, but we see that quite a bit where private money lenders are getting a little piece of the profit on a deal plus some interest.
As long as it goes to the IRA. So like
as long as it goes to the IRA.
So
exactly.
if you lend somebody, $100,000 for as a private money lender, when they're paying you interest payments, or if they're maybe just paying you let's just say they're paying you one lump sum at the end of the deal. It's a fix and flip. That check they're making out to Mat Sorensen IRA.
Yep.
And it just goes right back in that
Directed
account.
Trust Company, FBO, Mat Sorensen IRA.
There you
technically,
go.
Yeah.
There you go. So it's all going back right back into the account.
Got it. Okay, that helps.
I know and correct me if this is wrong, I even know a realtor who was doing he was using his self-directed IRA for a fix and flip. And when he sold the property, he didn't even want to pay himself a commission.
Yes.
Because
you technically can't.
I didn't want to say yes or no, but I was hoping you would chime in there. But he said he doesn't even pay himself a commission on that deal because you can't pay yourself with the proceeds.
Yeah. And so you could flip properties in your IRA. That's super popular because your IRA buys it, it flips it, it gets all the profit back in, and if you do that in your personal name, that's short-term capital gain.
Yeah.
It's not long-term capital gain. There's no depreciation stuff on a flip. So you're usually in a much higher tax bracket, but you could use a self-directed IRA for that. Now there is for agents and people that are licensed, you can't get a commission when your IRA is buying or selling because there's something called self-dealing. And there's a self-dealing prohibited transaction where if you financially make money because your IRA does an investment, it causes this self-dealing prohibited transaction. So getting a commission, even though you may be licensed for it and could do it personally, creates this prohibited transaction. But you can waive the commission basically and let your retirement account get the benefit essentially of that.
Or just get it off the sell price. Just say, hey, instead of paying me a commission, let's just buy it sell it to me at a lower price.
Exactly.
Interesting.
Yep. So you could just adjust. And when you're buying, you can just waive the commission, and it basically, you're paying less to have to purchase the property. The IRA gets the benefit of that, which is okay. You just can't benefit from your IRA doing something by making money. But you could flip, and you mentioned the checkbook IRA too. I mean, that's another thing for people that are flipping a property in particular, or even doing a rental property. This checkbook IRA, we call it an IRA LLC, is super nice. See, when you have an IRA, and let's say you're going to flip a property, well, you got to buy it first, right? So the contract's going to be in the name of Directed Trust Company, FBO, Mat Sorensen IRA, and you're going to approve that contract, but we sign for your IRA. You got to send that to your IRA custodian. Like legally, we're what's called the trustee of your IRA, so we have to sign off on that crap. So we're going to sign that, and this happens all the time. It's fine. And then we're going to send the earnest money, okay, to title escrow. Cool. And then you're going to close. And then you got to sign all the paperwork, and then you got to send it to us, and we're actually going to sign for the IRA so you can close. Then we're going to send the wire to close and buy the property. Then you're hiring contractors and subs, and you're buying materials. Well, you got to run it through your IRA with us. And you got to authorize that. And we're sending checks or sending wires or ACHs to do all this stuff. That can be a pain for real estate, particularly like a flip or something, or a rehab project. So what a lot of clients like to do is, rather than their IRA own the real estate, their IRA will own an LLC 100%. They can be the manager of the LLC. So rather than Mat Sorensen's IRA buying the property, Mat Sorensen's IRA owns an LLC 100%, and I'm the manager of the LLC. That LLC is going to have a bank checking account, just a regular LLC business checking account that the IRA money is invested into. And then that LLC is going to be the buyer on the contract. Now, when you're buying the property, it's ABC Investments LLC, or whatever you called your LLC, is the buyer on the property. You can write the check, send wires from your LLC business checking account because you're manager of the LLC. You're the officer that can do stuff on behalf of the LLC. And that's cool because now you can just use a debit card too on it too to buy materials or whatever it is. You can pay the contractors right there. And some people call this checkbook control, but you now are in authority to manage the transaction better. Now the LLC gets all the money. Like when you sell it, the money goes back in the LLC, and you can go invest it in something else.
Right.
But remember, you don't own the LLC, so you can never take money from the LLC's checking account because you don't own it. That's got to go back to your IRA, and then if you want to take a distribution, you can take it from your IRA. But that IRA LLC is super popular. You can partner up people in LLCs too. There's lots of things to learn there. There's chapters in my book. We have webinars on all this stuff too at directedira.com. But that's a super cool strategy for real estate clients. I even use that structure myself. Like I bought rentals and own rentals and do the private money lending we've talked about. I actually do that out of an LLC. Like I sit in the office at Directed IRA and can push the buttons of send my money around, I have to get 2-party authorization, but even I use the LLC because I think it's just so much faster and more convenient to do an actual transaction.
Wow.
That's great.
I love it.
What would you say to somebody out there who doesn't have a retirement account right now? Obviously, I know that the Roth is more favorable, but maybe just give us like a 1 or 2 minute synopsis on that.
Yeah, I think for someone that doesn't have an account now, and I'll talk specifically to real estate professionals, you should consider a solo 401k. Okay, there's something called a solo 401k that's basically a 401k plan for someone self-employed. We have a lot of our real estate agent clients that, even if they have someone that works for, that's their kind of 1099. So, but they're like self-employed with no other employees. Well, the IRS lets you have your own 401k. The reason that's cooler than an IRA is you could put more money in. So if you're starting at zero, you've got to be able to get a lot of money in. See, an IRA, I can put $6,500 a year in. That's going to take me a while to go from zero to enough to invest. But in a solo 401k, I can put $66,000 a year in per year because it goes under the 401k rules. Now, the solo K, you can self-direct. We set them up at Directed IRA too, but it's a really powerful strategy for self-employed people with no employees. 66 grand a year, you could do Roth or traditional dollars in that, whatever you wanted to do. Now to max out the 66 grand, you need to be making about 180,000 net income a year, which if you're going to be putting 66,000 away, you've got to be making at least that because you got to live too, but you got to be making at least 180K. But even if you're making $100,000 a year, let's say, and this is your net income, and this is kind of your W-2 from your S Corp or your net income if you're a sole proprietorship. But let's say you're making 100 grand. you can put in about 47,000 into your solo K a year just off 100,000 net income. So there's some formulas on how that works, but
That's
I would
huge.
seriously consider a solo K for anyone, again, self-employed, no employees. We do them all day at Directed IRA and at our law firm, KQS Lawyers too. But if you're not self-employed, you should be participating in the company you work for is 401k. Now, one of the bummers is you're typically locked down while you still work there. Like if you work, let's say you work at Dunder Mifflin, you know what I mean? And, you've got the Dunder Mifflin 401k plan, you're Pam and you can put money in the 401k there, but you can only buy the mutual funds and ETFs they have available on the 401k, and you can't pull your money out.
Right.
You're stuck there. The only way you can pull your money out is if you hit 59 and a half. So maybe you're like Creed or some of the other ones, the older people there. Even if you still work there, you can move your money out.
Yeah.
Okay. So some people are like, man, if you're 60 plus, you can actually, even though you work there, you can move it out. Once you leave employment, okay, think of Jan, right? She quit. She, under a hostile work environment, situation. She watched The Office. Okay. She doesn't work at Dunder Mifflin anymore. She's only in her 40s. She can roll that money to a self-directed IRA because she doesn't work there anymore. Now, the last little office example I'll give is Dwight, okay? Dwight Schrute, okay? Dwight can participate in the 401k plan at Dunder Mifflin. He's limited to buying the crappy mutual funds and ETFs that they have in their 401k plan as options. They won't let him buy real estate. But Dwight Schrute has Schrute Farms on the side. He's got a side hustle. You can do a solo K in your side hustle, even though you might have a day job with a 401k.
Right.
So he can come over here and do a solo 401k out of his business Schrute Farms, and that solo K could be invested into real estate.
Yeah.
So there's a little big summary there of like your options. Participate in your company 401k if you can. You might be able to roll it out if you don't work there anymore. If you got a side hustle, do a solo K, or your main hustle, you're self-employed with no employees, do a solo 401k.
I love that.
So if I have a solo, I call it a profit sharing plan. Is that the same thing?
Yeah, a solo 401k is a combination of a profit sharing plan and what's called a defined contribution plan.
There's no fancy way for me to convert that to Roth, right?
No, there is. You can convert it to Roth.
Yeah.
Yeah. You have to pay the tax. So let's say you had 200 grand in that profit sharing plan, which when you put the money in, you got a tax deduction, right?
Yeah. Yeah.
So the IRS will say, cool, we'll let you go to Roth. And let me make sure everybody understands why this matters. Okay, those traditional dollars, John, let's say you got 200 grand. Let's say by the time you hit retirement, it's 2 million.
Yeah.
Well, when you start pulling that money out at retirement, you pay tax on traditional dollars. So you're 60 now, and you're pulling the money out. You'd pull 100 grand out for the year. That goes into your taxable income from the year. That's the deal on traditionals. The government gave you a tax deduction to put it in, and they said, all right, you don't pay taxes, you grow it. But there's a catch because we gave you a tax deduction a long time ago to put it in. When you pull it out of retirement, you're going to pay tax on the way out. A Roth basically is you didn't get a tax deduction to put it in. When you make Roth contributions, the IRS does not give you a tax deduction. And the government actually likes Roth accounts because the government is so focused on their budget right now. They don't like traditional accounts because it reduces how much tax you pay now. And they don't give it. Who's in Congress right now could care less about what the budget's like in 20 years. So they actually love Roth accounts, which is crazy. So, but in the Roth account, I didn't get a tax deduction. I don't pay taxes, I grow it, and it comes out tax-free on the way out. That's the sweet thing about the Roth. And the reason people love Roth accounts, me included, it's our most popular account at Directed IRA is actually a Roth IRA. The reason it's the most popular, and you could do a Roth solo K too, by the way, or a Roth 401k, a Roth account in your pension, in your profit sharing plan. The reason it's so popular is I'm not paying tax on the larger amount. Like the money I'm putting in is smaller. I'm going to invest it and grow it over 20, 30 years. I'd rather pay tax on the little seed of money I'm putting in than pay tax on the harvest on the way out.
Of course.
Yeah.
And so that's why people love the Roth is they're having a little bit of discipline. Now, if you're sitting like you are now, John, with traditional dollars, you can convert them to Roth, but you got to pay tax on the value of the account. So if you have a $200,000 account, let's say, that you want to get to Roth dollars, and this is whether it's a traditional IRA, you want to be Roth IRA, or traditional profit sharing plan, you want to be Roth dollars, you have to do a Roth conversion. But you're going to get a 1099 for $200,000. It's going to go on your tax return. You're in a 40% tax bracket, state and fed. That's going to be an $80,000 tax bill to make that conversion.
Gotcha.
So it's going to suck the year you do it. And sometimes clients even break it up over multiple years.
Yeah, I was going to say do it over a couple of years.
Yeah, we call it chunking. And a lot of it's very popular now, actually, because do a little bit now, like do half of it now, and then do half of it on January 1st of 2024 to break it up over 2 tax years. But yeah, you can get to Roth. It's called the Roth conversion. That was my long
that was helpful.
That's super helpful. Now, if anyone's listening to this and wants access to you to learn more, what's the best way to do so?
The best way would get to directedira.com for a number of reasons. One, we have webinars there every month. We have workshops. We have our Self-Directed IRA Summit coming up in 2 weeks in North Carolina. We have our Directed IRA podcast. I also have a Main Street Business podcast with my partner, Mark Kohler. We have so much content we're putting out there. You can find almost all of it at directedira.com. My website too, matsorensen.com. It's Matt with 1 T, MATSORENSEN. You can find me. I'm also, all my social handles are mostly at Mat Sorensen. So yeah, awesome. We're out there. We're pretty easy to find. Even if you just Google us, you can find us.
Sweet. And
thank you, man. That was great.
And if you're listening to this, go to the YouTube channel. It'll be in the description below. This has been awesome, and it's such a big insight for people who, like myself, not really aware of it, but need to be. So thank you for jumping on.
We'll make sure we link your book as well down below.
Oh yeah, SDRA Handbook.
Awesome, man. Well, thank you again. We really appreciate it.